Welcome to the Jason and Scott Show, your source for the latest news and trends in the e-commerce industry. Featuring host Jason Retail Geek Goldberg, Chief Commerce Strategy Officer and Publicist, and Scott Wingo, CEO of Get Spiffy and co-founder of Channel Advisor. Here are Jason and Scott.
Welcome to the Jason and Scott Show. This is episode 219, being recorded live on Wednesday, May 6th, 2020. I'm your host, Jason Retail Geek Goldberg, and as usual, I'm here with your co-host, Scott Wingo.
Hey, cool cats and kittens. Oh, sorry, wrong show. Hey, Jason, and welcome back, Jason and Scott Show listeners. About 2 months ago, we had our first live listener event, and it was so popular that we had a lot of requests to do it again. We couldn't get to all the questions, so we have a backlog of questions from that. Jason, before we jump in, I see we've got some Q&A going on here. One housekeeping thing is, if you do want to ask a question, we would love to do it live, where we'll have your audio come in and you can ask it using the audio, so that when people listen to the podcast, they have a little variety in what they hear. But before we do that, Jason, any road trips you want to report on, or any news you want to go through?
I have done amazing road trips in the last 2 months. I've been to Russia. I've been to Europe. Ordinarily, like, I book all these gigs and I have to reserve like 3 or 4 days travel time to get to them. And now I can do like 3 gigs in different continents in the same day. So it's embarrassingly more efficient. And I feel like I seem more credible when I'm further away and on a screen than I do when people get me in person. So yeah.
Have you gotten your joke timing down? I found on the Zoom, it's a little bit harder to kind of like judge the audience with your timing.
Yeah, I just assume I have my own laugh track I play for my own benefit, and so I just I'm just assuming that works.
You had time to do a laugh track, but not our theme song. I'm hurt.
I'm prioritizing. Yeah, I apologize to all the live listeners. You didn't get to hear the show music that ordinarily gets added in post. But if I were a more diligent audio engineer, I would have arranged a way to play it for all of you to get in the mood for tonight. My bad. Scott,
one thing I want.
Oh,
good.
I was just going to say, like, this is a 3-day streak for me of goodness. Like, May the Force be with you day. Always a super important holiday. As you know, I have a young son that's like completely fixated on Star Wars. So he's decided that that's the greatest holiday ever. And with utter fear on his face, he asked me first thing in the morning on May 4th, Dad, do Jewish people celebrate May 4th day? And he was thrilled.
Yeah.
Yeah, he was thrilled to find out that it's a non-denominational holiday.
Nice.
And then we transitioned seamlessly into Cinco de Mayo, and I did a lot of customer gigs with margaritas.
The correct Star Wars holiday, there is a competition, is Return of the Fifth.
Got you. I did not.
Revenge of the Fifth. Yeah, Revenge of the Fifth.
Stretched it out to 2 days. I had no idea.
Cool. And then today was you get to podcast. So good times.
Exactly. I feel like, and special honor, we're already being Zoom bombed.
Yeah.
In the chat.
We got to bring Olivia into the live discussion.
Yeah. Are you a legit person that's having fun with this, or are you a troublemaker that I have to boot?
A troublemaker.
Seems like Olivia should get booted.
Yeah, I vote the boot.
Yeah. All right. Bye, Olivia. It was good knowing you.
Well, you're booting Olivia. One of the things I wanted to talk about is there's been some more earnings since our last podcast last week. Last week, we really focused on the Amazon Q1 results, which were pretty stellar. And then since then, we've had Etsy this afternoon. This morning was Shopify. I think it was yesterday was Wayfair. And then this afternoon, Square and PayPal. And I would say the overwhelming theme has been, everyone has seen this surge of activity due to the pandemic. The PayPal CEO said he feels like digital payments have moved 3 years ahead into the future. Square as well. One thing I didn't understand about Square is they blew away the top line, but the bottom line had a huge impact. I don't know if that's because when they sign up new customers, they get some really good rate or something. And then Etsy was interesting. They have become the go-to place for handmade masks, which is they're having quite a moment. So they sold something like, I think 3 to 8 million masks on their platform, which was amazing. Handmade face mask. And then Shopify just kind of crushed expectations. And the one analyst I follow there, Colin Sebastian, he may be on. He raised their price target from $475 to $820, and it's currently at $730. So whoever asks for stock recommendations, that may be an interesting one to look at, because it's kind of one of those, playing the guys selling the pickaxes and shovels versus the actual folks doing the mining. So Shopify stock, I think, is going to rip pretty good. And then you and I have chatted about Peloton. They crushed estimates as well. And after hours, I saw they were trading up pretty substantially. And they haven't even been able to launch their new treadmill because it has this white glove in-house delivery that is not social distance friendly. So those are some interesting things going on the stock side that have an e-commerce digital tie-in.
Yeah. Are we jumping into the stock question, or were you just that was just kind of a pre-answer?
Jump.
Yeah. So I'm the world's worst at stock advice, and what I've learned is it turns out it's not all that helpful to predict what companies are going to do well and not do well. Like, what's more important is to understand what's in or not in the existing price if you want to make money. So with that huge caveat that I'm usually wrong, I'm going all in on the pickaxe and shovels. And I'm going to suggest some stocks like some of the micro fulfillment centers that grocery stores are now buying, right? Like, so my premise is digital grocery before COVID-19 was 3% of grocery sales. And there was a prediction that they might get to 5% by 2022. Digital grocery is at 10% right now. So basically we've jumped forward at least 5 years in the future of digital grocery. And huge caveat in digital grocery, it's wildly unprofitable. So when the retailer has to pay for all the grocery picking and the grocery delivery doesn't make any money. So the way retailers are going to ultimately make money on this digital grocery is get you to pick up your own groceries via curbside pickup and use a robot to pick the order instead of paying a human being to pick the order in the store. And so these robots for grocery stores are called micro fulfillment centers. And there's at least 3 of them out there that have big pilots with grocers right now. And they all have reported more than double-digit sales growth since the beginning of the pandemic. And so it was super early in their evolution. And so the fact that they're already seeing this spike in demand bodes probably really well for them. So that's companies like Alphabot and Takeaway, and I'll think of a couple others I'll put in the show notes tonight.
Cool. Should we hit the audience up for some questions?
Yeah, I do see a couple of hands, or I thought I saw at one point a couple of hands raised.
If anyone wants to chat about anything, hit the little hand raise there.
Yeah. Should we start with while we wait for someone to raise their hand, should we start with
Here's Michelle. Let's hope this isn't a crazy Zoom bomber. Let's see what we got.
I see it. Hang on, Michelle. We're turning you on.
Hey, Michelle.
Hi, guys. How are you?
You're live on the Jason and Scott Show. How are you?
I'm good. Thanks for having me. This is great. My first live podcast.
We're excited for you to be here. For the rest of the listeners, you are a past guest on the show when you were with Euromonitor, and you've actually started a new gig recently with Salesforce.
Yes, I now work at Salesforce. I started in early March. If there's one place to start working at during a pandemic, Salesforce is definitely it. It's a great company, and I'm really enjoying my time here.
Yeah, and it seems like they're... Oh, so go ahead, Scott.
Have you met Mark Benioff?
Not yet, but it's definitely on my to-do list.
How about the top of the Salesforce Tower?
Also on top of my to-do list once it's reopened. I'm also excited about our new tower that's coming in Chicago. The top floor will be open
A
for
service.
events. So I hope to host quite a few events once it's built in 3 years.
Nice.
Yeah, my
Cool.
question is, are there any topics or themes or issues in the retail that aren't getting enough attention that you think that we should be aware of?
Good one. I have a few opinions, but Scott, did you have something you wanted to say?
I would say so you go to these conferences, right? And there's all the talk in the front of the house, and then there's this back of the house talk. I would say the back of the house talk I hear the most in e-commerce, and it's kind of bubbling out now, is the sustainability and scalability of this kind of direct to digital brands. So does DNVB have legs? Can you build something over 100 million? Were some of these things anomalies like Dollar Shave Club and some of those, or is this kind of giant gold rush of these digitally native vertical brands gonna, will it sustain, or will it die in a big fire pit of people that don't make it through? So I think that's really interesting to think through. At the same time, whenever I'm watching TV, I'm seeing a lot of ads for these things. Now, ad rates have come down because traditional advertisers are kind of on pause. So you're seeing a lot of these kind of what I would call more direct response kind of ads on TV. So it's an interesting topic that I don't think is getting enough probably coverage out there.
Yeah. And again, it depends on what echo chamber you're in and what you hear in terms of what you think might be covered or not covered. But I'll tell you, in conversations with retailers, I'm still somewhat shocked how unrealistic a lot of retailers seem to be about the likely duration of the impact of all of this. So, we talked to lots of retailers that have like this 3-stage plan or this 4-stage plan. But the final stage of their plan is almost always back to normal. And by normal, they mean pre-COVID-19. And back to normal is almost always the end of 2020 or maybe the middle of 2021. And I'll be honest, both of those things somewhat surprise me. Like, I don't think we ever go back to pre-COVID-19. I think there's enough things that are permanently going to change, that retail and commerce in the US are going to be wildly different in the future. And so I think just the notion of going back is sort of quaint. And, frankly, like we've actually brought in some epidemiologists and some immunologists to sort of help us scenario plan. And it just doesn't seem like you talk to any credible expert that really sees this ending or, going back to the kind of things where we all get to go in person to a trade show or go to these big mass group things, or frankly have unlimited traffic in a retail store, until we have a full-blown and widely distributed cure for the virus. And realistically, the fastest of a vaccine's ever been produced in the history of the world is 5 years. So let's imagine that with the crazy resources marshaled, we do it way faster than that, and we do it in 18 months. You still got to find a way to get 7 billion doses out into the world and get everyone to take it. And oh, by the way, a lot of vaccines require more than 1 dose. Like, there's all this negative news that makes me think that we're going to return to a lot of our old activities, but in a significantly modified way for probably 2 years. And I don't hear that a lot when I talk to people thinking about their plans. When I talk to retailers that are forecasting their sales, like, none of them are thinking that, like, for the foreseeable future, they're not going to be allowed to let an unlimited number of customers in their store. Like, they think of that as a very short-term thing. And I hope to be wrong, but I think they're missing it. What about you, Michelle? Is there anything that you feel like people aren't talking about enough?
Well, I am particularly curious about returns because we see all of these, we see all the metrics for digital commerce rising, but we know obviously there's a high return rate associated with e-commerce, particularly in clothing and footwear. So I haven't seen too much around the returns issue, and has return rates, have they dropped down because people, aren't buying what they don't need. They're not necessarily buying 3 items, only keep 1, or are return rates holding steady? Sort of A, the shift in consumer behavior, and then B, we are seeing a little bit more around the actual logistics doing the returns. How do you keep the merchandise clean and safe, and how do you process it? But yeah, I'm really curious about the return issue and how that's factoring in into the situation.
Yeah, it's a great topic. And in my observation at the moment has been like the categories that are most up in e-commerce are not the categories that traditionally had super high return rates, right? So digital generally always has a higher return rate than in-store. But in apparel, for example, it's much more acute. And, apparel sales online have been pretty soft right now. And so then the retailers that are really booming have temporarily sort of canceled their return policies. And so like, if anything, there's a slight extra kiss right now in profitability that a lot of these retailers are seeing lower returns because either they're not accepting returns or there's extra friction on the part of the customer to do returns. And so they're just not doing it. So sales of the high return items seem way down, but returns seem way down. Honestly, though, in my mind, that's getting overwhelmed. There are all these other costs of e-commerce sales that are artificially high right now that, are more than eating up the margin that retailers are gaining by this, what I presume is a temporary abatement of returns. And so to me, like the top line story that we've heard in a ton of the earnings is, hey, good news, e-commerce is up. It's not up enough to make up for all those sales we lost in the store. And those sales are way less profitable than they would have been if they were in the store. And so margins are super, super challenged.
I follow the startups in the return space, and it's interesting. I've been at this like 20 or 30 years, and they always fall into 2 categories. There's ones that have like some digital solution where they don't touch anything. At the end of the day, they're kind of like issuing an RMA and doing some tracking. But like every retailer already has that, so I don't 100% understand how that solves anything. Or they go super heavy and they're like going to build a whole infrastructure and touch every product and grade it and resell it in some way. And I've never found a company that has some kind of like solution in the middle that helps companies handle the logistics. I remember in the late 90s, like this kind of 2002 to 4 timeframe, there was a company called Return Buy, and they raised like $30 million, and they went and built this big returns facility. And I did a tour of it, and it was amazing. They had all these conveyor belts, and things would go upstairs and go through this sorting system. And I was there, and I was like on a 30-minute tour, and I was there for, I saw 5 packages go by, and some of them were the little ovens, like the Barbie ovens, but they couldn't resell those because the food inside had gone bad. And then there was one Barbie without a head. And that was kind of like, all right, I've been here 30 minutes. I've seen 5 products that probably can't be sold online. How is this business sustainable at all? So returns are really hard because there's there's probably some benefit of scale. And if there is, Amazon's going to win because, they're going to have the internal in-house scale that no one else is going to be able to get to.
Yeah. And the related question, we have these kind of problems with like, how do we make stuff that gets returned safe to resell or to get some monetization from? For the apparel guys, if the stores ever reopen and customers are allowed back in the stores, a big question is how you make dressing rooms safe. Like both, how do you keep the room itself safe? But what do you do with the clothes that a customer tried on and didn't buy? And so there are interesting questions there. Do you have to disinfect that stuff? And do you do it in a way that doesn't harm or damage the products? One idea we've seen a lot in China so far is the clothes that customers try on get quarantined. And so literally, customer tries on a dress, doesn't buy it, and they have to put that dress in a quarantined area for 2 days before they bring it back out. So I think there's going to be a lot of interesting new things that you wouldn't necessarily think about at first blush.
Yeah. Cool.
Great.
Thanks, Michelle. Thanks for the question.
Oh, you're welcome. Thanks for taking it.
Good luck in your new role, and send us a selfie with Mark Benioff.
Yes, I will. I'll get a Garfy first with Rob.
Okay.
I feel like the Garfy is easier, but I do think it's a funny time to start a new job because, like, you probably haven't seen the lower half of any of your coworkers yet.
I haven't met any of them in person since I started. So
yeah, that's odd. Awesome. Well, thank you much, Michelle. I will safely remove you from participating so you don't have to worry about making noise.
Anyone else have a question? Raise your hand. Don't take Olivia or Penny.
They're both gone.
Bad actors. Okay. We do have a write-in one here. Let's tackle that. Christopher asked, what brick and mortar retailers are going to come out of this stronger and why? Jason, you want to take a first shot at it?
Well, your friend Jim Cramer on Mad Money had a rant a couple weeks ago where he said, like, we're trending towards a world when there's only 3 retailers left in the United States, and in his mind they were Amazon, Walmart, and Costco. I do think all of those retailers are super well situated. Obviously selling essentials is very helpful right now. Having already leaned into digital and particularly omni-channel retail is super helpful right now. So those and those particular 3 retailers probably had the best balance sheets in retail going into the pandemic. So those are the kind of retailers that are going to do super well. I didn't say this to Michelle, but another one of the things I don't think is talked about enough is how many retailers are likely to go out of business because of this. And so these healthy retailers are going to grab up that share and get even bigger. So we're going to see some huge consolidation at the top. But even the retailers that don't go out of business are likely going to right-size their brick and mortar fleets. And so we saw the first announcement, it was either today or yesterday, but Nordstrom is closing 16 mainline stores, which is about 14% of its mainline stores. And people were talking about being surprised by that. I actually think that's light. I think a significant number of relatively healthy retailers are going to close something like 25% of their stores.
I didn't see that Nordstrom's news.
Yeah.
So do you think,
I'm here for you.
so no one's bought apparel during this time. And, one theory would be people are, they have all this, if they've survived this and have the means, there's going to be a big kind of bump in buying apparel items. You don't think Nordstrom benefits from that, or you're just not sure they make it through to that point?
No, well, so I think there's a bunch of headwinds against apparel. So there is this premise. There's all this delayed gratification, and in China they talked about when they reopened stores, they were really hoping for revenge shopping, is what they called it, which I thought was pretty funny. And this notion that there was all this pent up demand for consumerism, and they hoped customers would go out and help boost the economy by aggressive spending. In general, there are some occasions of that, particularly in luxury. Like there's some luxury retailers that set records the first day they opened up. In general, we haven't seen that kind of revenge shopping. And part of the reason is because there's huge economic uncertainty. Almost every market is exiting from this quarantine period of the pandemic in a super deep and sudden recession. And so consumer confidence is super low. And so in the apparel space, you just have all of these problems. You had a perishable inventory that's sitting in all those Nordstrom stores that they couldn't sell. Even though Nordstrom is pretty better than most at online, the majority of their inventory was locked in stores that were locked in malls. So they couldn't sell that inventory. It was perishable. So it's not fashionable or desirable when they can reopen those stores. Most of their stores are at malls, and there's a lot of evidence that customers are more afraid of going back to the mall than they are to freestanding stores. Nordstrom didn't know what to, and I don't mean Nordstrom particularly, apparel retailers haven't known what to do when they could reopen, when thered be demand for their goods again. So their supply chains are all screwed up and they haven't ordered the next season stuff. And, a lot of occasions that people buy apparel for are now gone. Like you didn't need to buy a prom dress this year. You didn't need to buy an Easter dress this year. You're not going back to school shopping at the moment. And so like, even if there's a little pent up demand and they get a little bump when they reopen stores, there's enough long-term negativity in that apparel category that I think in any apparel, every retailer is really smart to maximize their liquidity right now and get their balance sheet in the best shape they can. But particularly in apparel, you really need to buckle up for a pretty rough ride, because it's not going to be pleasant.
Yeah. One that I think is going to do well is Apple. So I've had like 10 instances where I wish I could go just run to the Apple store and grab a widget or something, and then had to either wait or I know several people at work have gotten broken computers they want to take in to have fixed, and if the Geek Squad or whatever that is called is broken, no geniuses to be had. How about you didn't say grocery? Obviously, those are going to do really well. And then we have, I think the drugstores have done pretty well. I've kind of wandered into a couple of drugstores and they've been pretty busy. And one here in town got some hand sanitizer. It was like very exciting. So it caused a pretty big set of demand from that.
Yeah. In Raleigh, that could be a huge event even before the pandemic. But
yeah, we
yeah,
get excited about little stuff.
Yeah. Grocery is like, obviously the shift to digital grocery is really exciting. So if you're someone that's in the digital grocery space in particular, like this is a huge boom for you. For traditional grocer, it's a mixed bag, because the shift to the digital channel is hugely problematic from a profit standpoint. And there's other bad stuff that's happening simultaneously. Consumers are buying bigger packs of stuff, which are less profitable. The grocers' costs right now are skyrocketing. They're paying employees more. They have all these extra cleaning processes. Companies like Get Spiffy charge them a fortune to come in and clean their facilities in the morning before they open. They have restricted hours. They can't let as many people in. So they're like, it is good. There is higher demand for grocery. There's a lot of operational challenges with profitability. I think in the long term, those get solved, but it's not going to be an overnight thing. And then like really for grocery, for it truly to be a win, there's a behavior that's happening right now that has to stick. And this is the most interesting thing to me about the pandemic, is I talk about these kind of 6 different categories of consumer behaviors and which ones might be permanent versus which ones will regress after the quarantine. At the moment, there's an enormous shift from consuming meals in restaurants to consuming meals at home. And if a version of that behavior sticks, like it's clearly not going to stick to the level we're at now, but if the new normal is more skewed towards consuming at home, that obviously increases the TAM for grocery. But if the consumption goes back to the exact same levels and it's just a shift from in-store sales to digital sales, that's probably not an economic windfall for the traditional grocers. It might be an economic windfall for the Instacarts and Fresh Directs of the world, and a big Debbie Downer for the Peapods of the world that turned off their e-commerce right before the pandemic.
Oops.
Yeah.
Looks like Christopher has a question. Let's see what he has to say.
Hey, Christopher, let me find you here. And you are on. Hi, Christopher.
Hey, guys. You guys actually just answered my question.
Tell us what it was so we can take credit.
So it was I was asking the question that you just answered about what brick and mortar retailers are gonna come out of this stronger. I've got a backup question to help.
Yeah, hit us.
So the backup question, how are retailers handling training their frontline staff, specifically kind of best practices with COVID? And I asked the question selfishly, right? Like the 2 stores that I've been in the last month, CVS has one-way aisles that their employees seem to disregard, and Target, kind of has this buy online, pick up in store option, but they haven't made the pivot of moving their pickup area from away from the cash wrap. And so what it does is it sort of creates this bottleneck of people. So I don't know if there's sort of any examples of companies that you guys have found that, are really kind of thinking about sort of how to address kind of a post-COVID or in COVID kind of environment in a better way.
Yeah.
Yeah. Do you want to take it first, Jason, or?
Sure. So both, I was sort of quoted in a Wall Street Journal article this week with the exact same observation that like my local grocer has one-way aisles and all the employees and professional pickers in the store totally ignore it, right? So it, and training customers for new behavior in the store requires like a significant effort and a significant amount of messaging and reinforcement, none of which is happening right now. So that particular example, totally agree with you. And side note, totally controversial and not good evidence that one-way aisles are safer, right? Like, so the notion behind one-way aisles is you don't have to walk cross someone in these narrow aisles where their droplet spray is almost certainly going to hit you if they're not wearing a mask. The science on the droplet spread, like your droplets are staying in the air long enough that you're walking through the droplets of the person in front of you, even though you're both walking in the same direction. So that's kind of a bummer. But the bigger problem is if one-way aisles make you spend 30% more time in the store to complete your shopping list, you're actually walking by more people and getting exposed to more risk and exposing more people to risk because of the one-way aisles, then you're actually reducing risk because of the one-way aisle. So that particular one's controversial. Direct answer to your question, to me, the best retail operators in the world that are killing it right now are some of the regional grocery stores. So to me, an absolute hero of this is H-E-B, which is a regional grocery store in Texas. Great backstory. These guys identified the potential impact of the pandemic in January, sent their whole executive team to China to talk to the grocers in China that were being impacted by this. They came back, they put a plan in place in February. They totally revamped their supply chain. They instituted all these touchless processes in the store. And they have a great engaged employee base that they really made ambassadors for all these changes. So like, going to a regional like H-E-B or Hy-Vee in Iowa, those guys are executing really well. If you step up to a big national grocer, like to me, Kroger has taken an interesting leadership position because not only have they rolled out a lot of best practices, they actually published all their best practices, launched a website, and are giving away all of their employee training materials and assets to any other retailer that wants them. So if you're a smaller grocer that like needs signs explaining to customers what new policies are, or you need audio messages to play over the PA system, or you need a new addendum to your employee handbook and training for employees, Kroger is giving all that away. And so like it, there was an extra level of diligence in creating that. They created the materials good enough, not only for their own use, but to share with the rest of the world. So props to them.
Yeah, I would say, at a 30,000 foot level, there's, every consumer has fear, uncertainty, and doubt. So it's your job to try to give them peace of mind. And everyone has different response to this. There's some people that are pretty cavalier. And then there's other people that are like super freaked out, right? So the more options you can give people, then they can kind of use the risk. They can kind of, choose their own risk path, if you will. One of my best experiences during the pandemic was Best Buy. They have curbside delivery. So I did a normal BOPUS. So I did a buy online, pick up in store. I needed to get some batteries for a Nest camera kind of thing. And then, in the app, it kind of geofenced and it said, hey, looks like you're near the store. Are you ready for your curbside delivery? I said, yeah. So it did some smart things using the app. And then I've done a lot of curbside delivery with some of the food and stuff. This one was like almost instantaneous. The runner came out, then the runner like stayed pretty far from the car, and they went to the passenger side, and they actually asked, and they were wearing PPE, and they asked, can I set, you want me to hand this to you or just set it in the seat next to you? So there was like a lot of awareness on their side about kind of seeing where my risk level was. I'm pretty high risk. I just kind of, it's my normal mode of operation, but it was really interesting that they were really sensitive to that. So that was one experience. I think table stakes is you got to have PPE for all your staff. You can't, that has to be a requirement. Definitely gloves and a mask. The more medical the mask looks, I feel better as a consumer. So some of these like cloth ones just kind of like, they have like a brand on them. I appreciate the brand as an entrepreneur, but like the fabric thing is a little dodgy. Touchless payments. I've been in a lot of these. I've tried using a lot of them, and it really, Jason, you're like this. When I went to a grocery store, it's called Fresh Market, and I used my Apple. I did touchless with Apple Pay. And then she's like, I want to see the credit card. Well, I do have a physical Apple card, but she's looking for the digits, right?
Yep.
Plus, the thing generates random digits, is my understanding, right? It generates a one-use credit card. I tried to explain that to her, and that did not go well. So then I had to switch to ATM, and then I was like, well, while I'm here, I'll get some cash back. And then, I put in like $50 cash back. She's like, well, the maximum's 40, but then the terminal had a $50 cash back button. and then I was like, the third time I was like, well, maybe this one, maybe third time's a charm. And she was like, she didn't really even flinch, because I guess it happens all the time that they have these things. So do the touchless stuff, but make sure, I would have her, some of the managers go through the experience to make sure it's really working flawlessly. That was one. The other thing I have found grocery shopping is I'm like the only non-Instacart person in there. And by Instacart, I mean Postmates and all the other, Shipt and whatnot. So I feel like those people need some other workflow or something, like their own registers or something like that, because they are, they take a lot of time to shop, because they're kind of like looking at the app, and they're kind of like, and then they're scanning something. I feel like it'd be interesting to have some other alternative way. Maybe there's like one store that's designated just for them or something. I don't know the answer to that. Yep. But it's kind of weird, because I'm kind of like, I'm very transactional, and they're clogging up the aisles, and there's literally like 8 of them on an aisle, and I'm trying to like juggle through them to get through the store.
Yeah. So and there is, that was a problem when only 3% of grocery was online. And so now that we're at 10, like there's a lot more of those professional shoppers in the aisle, and there are a lot more of those conflicts. Like there are, efforts around dark stores and those shoppers shopping from the dark stores. That some retailers are doing interesting things, like they're having professional hours and shopper hours. So both Costco and Whole Foods are, for the most part, not letting professional shoppers shop the store at the same time as customers. They've narrowed the hours that they're open to customers, and they have dedicated hours early in the morning and late at night for the professional shoppers. So all of this has allocation problems. Like, you can just sell less curbside orders if you're limiting the hours that the pickers can pick. But since they all have artificial caps on their density in the store at the moment, it makes more sense to have the shoppers in some hours and the customers in other hours. So you're seeing a lot of that. Definitely touchless payment is way up. And the thing that's going to be interesting there is, there's a lot of self-service POSs in retail, particularly in grocery, that all have touchscreens, which are now super icky, right? And so you can imagine there's a rush to retrofit all of those. And the non-touchscreen solution for all of those is going to be that your mobile phone interfaces with the terminal, and you use the interface on your own mobile phone. And so that's going to be a new behavior we're going to see rolled out and have to educate customers about. But I think, going to those touchless systems, scan and go, which some retailers had experimented with, is definitely going to be bigger. So I guess some of those things are interesting.
I went through one today, and they had put a thick Mylar bag over the terminal, and it was so thick I could hardly press the buttons. I guess they must take that off and clean it or something, or it maybe it was just designed to make me feel
want you
better.
to believe that. Exactly. Great questions. Yeah. Thanks very much, Christopher.
Thanks, Christopher.
Yeah, thanks, guys.
All right, we got Ricardo and Scott waiting by. Let's see what we got here.
Okay, Ricardo, you are live. Hey,
hi guys, Ricardo here, reporting to you from San Francisco. I'm a big fan of the show.
Awesome. Thanks for calling in. What's on your mind?
What I'm curious is if you can talk a little bit about like the P&L of a seller. How does it differentiate in the US versus in China? Like, are referral fees the same? Are logistic costs the same? I think I'm really curious. I know China is, as a percentage of retail e-commerce, a lot more. And I think it's maybe because they don't have a lot of the physical stores that we have in the West. But still, when you compare it with other developing nations, still so much more ahead. So I'm just curious your thoughts on that. Thanks.
Yeah. Well, a great question, Ricardo. A couple of things. So the dominant marketplaces in the US tend to be different than in China. So obviously Amazon's the dominant marketplace in the US, and Amazon has a singularly high take rate. So they charge like compared to most other marketplaces, a very high commission for each transaction. Alibaba's Tmall, which would be the most analogous to Amazon in China, has a way lower take rate. So first thing is the unit economics of the actual sale are more profitable for the seller because you're paying a lower commission. But that's a little bit of a artificial economy because Tmall is even in China is even much bigger than Amazon marketplace is here. And so visibility and discovery of your product listings is non-existent. Like there's so many listings and so many products, your product just isn't organically going to be found in China. And so Alibaba has a really low take rate because they charge you extra for all of the marketing services and search visibility services. So what you end up doing is having to pay a lot more to Alibaba's marketing arm, which is called Alimama, to have your stuff show up. And if you kind of compare apples to apples, like the general economics of the business end up netting out to be similar. By the time you pay your Amazon marketing services and your take rate in the US, or your Alimama services and your take rate in the China, those are similar, but digital commerce is way more penetrated in China, and they've leapfrogged brick and mortar, as you implied. So pre-COVID, depending on how you define retail, I'll go with a Forrester definition. 16% of commerce in the US was e-commerce. The rest was brick and mortar. In China, it was 38% before COVID. So US today, in April, 16% goes to 25%. In February in China, at the peak of the quarantine, 38% went to north of 50%. So digitally, you're going to sell a lot more goods. And then one other economic thing that's wildly different in China than the US, the cost of delivery is way lower in China. So because there's so much inexpensive labor, you can pay someone a very low rate to deliver anything in an hour to a 5-kilometer radius of your store. So it enables you to offer all kinds of cheap delivery of goods that would, the unit economics would never work in the US. And frankly, that driver, like those guys delivering all those things, I say driver, but a lot of times it's a bike or something else. Those delivery guys, that's a middle class wage in most tier 1 and tier 2 cities in China. So the economics all around work out much better in China because of that. Scott, anything I botched there?
That's good. The payments, I think, is a little bit lower. So we're used to kind of a 2% take rate. I think there it's a lot cheaper. And then the payment is through Alipay a lot of times. And then the other thing I would say is most Chinese sellers are embedded in a factory. So they're like, they're very, very close to where the product is made. And that gives them an edge where, I saw someone here that works for an auto parts company. So if you're at an auto parts retailer, there's a distributor, there's all these manufacturers. Some of them, maybe there's another layer where they took it from China and then, the parts from China and then added something. So you can be kind of, you got 7 people, 2 to 7 people dipping into the margin stack there. Whereas in China, you're typically factory to, right into the marketplace, essentially, maybe through a seller. So because of that, it also creates this very fast feedback loop. So you'll see like this really interesting things happen where, they can, they'll iterate very, very quickly because they have the factory tied to the marketplace, and then this feedback loop accelerates. The other thing, if you stacked another challenge for the Chinese seller is the same widget, if you take currency and try to normalize it, is selling for 30 to 40% less in China. So the good news is in the US for the same item, and if you looked at the currency rates, you're probably gonna get 30% more for that in the United States than in China, because it's so competitive and people are very value oriented in China. So you have more P to put it, more margin to kind of put into things in the US. So those are some of the interesting differences. Because of that, most Chinese sellers, their strategy, they actually make a lot more money selling out of China. So they'll sell into Russia. They'll sell into Mercado Libre, Brazil, South America. They'll sell. One of the most popular destinations is the marketplaces in Australia, and then obviously the U.S. and Europe. That's where, pre-pandemic companies like Wish and AliExpress were making a ton, selling these kind of hot products coming direct from China.
Good points. Great question, Ricardo. Thanks very much.
Thank you, guys. Have a good one.
Thanks.
Should we go to Scott Landry next, or do you want to take some of the typed in questions, Scott?
Yeah, let's do Scott, and then we'll hit the typed in ones.
Awesome. Scott, you welcome to the show.
Thank you, guys.
I feel outnumbered by the Scots now.
You are.
Yeah,
we've got 3 T's between us.
Yeah, exactly. And I'm also here in, just outside of Raleigh. I'm in Morrisville, North Carolina.
I heard Morrisville is much cooler than Raleigh.
It is much cooler. It is much cooler. And I'm a longtime listener, first-time caller. A few weeks ago, you guys had on Scott Divot, another Scott, on the show, and he talked about this being the time to not sit back and cut costs, but to actually invest in companies, invest for company owners to invest in their companies, saying that those failing to prepare to fail. We've also seen a lot of non-essential Amazon sellers struggle during the first few weeks of this pandemic. A lot have come back strong since then, and these companies have had to pivot and develop a multi-channel approach to their business. So this sets up my very fun question. Do you know of a software that you would recommend to all your listeners that would help them with managing a multi-channel approach that includes maybe a single user interface to manage all their e-commerce operations, such as, content, inventory, orders, marketing, advertising, product content feeds? Scott, Jason, would you know of anything like that?
Drawing a blank over here. Jason, you got anything?
I thought you were going to say Channel Advisor.
Yeah. Scott. Full disclosure: Scott's an account manager over at Channel Advisor, so he's teeing up the old Channel Advisor. What we do there.
Yeah,
but
that's right.
Yeah, a lot of people start. To be fair, a lot of people, especially smaller sellers, they'll start with a Shopify, a BigCommerce, WooCommerce, Magento. One of those offerings, and then they'll have a little bit of an ability to sell into other marketplaces. Sometimes their shipping software will get them a connection to another marketplace, but then ultimately they'll grow out of that, and that's kind of what we've built for over at Channel Advisor. So,
yeah. So certainly, I think there's different answers at different tiers of business and maturity of businesses. I'll be honest, I don't generally think of there being complete unified suites that are super successful for a broad range of customers. There definitely are unified suites in particular niche markets that really focus on a vertical. So you can find a unified suite for a furniture retailer or for a quick serve food restaurant that are pretty comprehensive. Shopify is inching towards being a unified suite. They're adding more and more of those services. And if I were a betting person, I would say they're eventually going to get to a pretty comprehensive unified suite. That seems to be an important part of their strategy. And hopefully they spend their money there instead of the stupid shop app that we could talk about later. They're at certain niches, there are some interesting unified suites. So Oracle owns a product called NetSuite, which actually has a pretty comprehensive set of e-commerce, order management, channel management, and outside of those, there are some tools that cover a lot of what you just discussed. So there are PIMs that are expanding into feed management, content management, and starting to do more of those kinds of things. So I think of a Salsify, as becoming more comprehensive for those kinds of things. But honestly, there's no dominant player. At the enterprise level, the enterprise players are mostly pretty sucky at it. By far the best in terms of a unified suite amongst the enterprise guys now would be Salesforce. So Michelle, that was on earlier, could talk to you about that. That's all I got.
Thanks, guys.
Awesome.
I appreciate it. I was just kind of teeing up the Channel Advisor commercial.
Yeah.
Awesome.
Yeah. So I can't believe Scott didn't send me one to play.
Cool. All right. So over in Q&A, Kelly asked, Has anyone done any good research showing the correlation between retailers being owned by private equity and their subsequent inability to react to COVID? Seems that PE ownership equals underinvestment in tech equals poor ability to respond to changes in business climate. But it'd be great to see some research. Yeah. So if seems like Kelly's pretty read up on this whole topic, but there are this tier of investor called private equity firms. We call them PE firms in the industry, and they essentially go do buyouts. And what drives their thinking a lot of times, there's a like anything, there's a broad spectrum of PE firms. They're not all like this, but a lot, I would say 80 or 90% are in this genre of, they do some financial engineering. So they'll go look at a business like a retailer. They'll see that it has a certain EBITDA and cash flow. And then on the other side of the equation, they have super cheap access to cash. So what they'll do is they'll go buy that retailer. They'll use that cash flow to go buy debt. And, because they've got this cheap access to debt, they can usually get a lot of debt. So they can go and say, this retailer's making $100 million. They can put $1 billion worth of debt because whoever's providing this debt is just looking for a pretty small amount of cash flow to cover a large debt. They do all that. And then when they do that, they effectively have extracted the future value of that retailer's cash flow out. And that is what drives their calculations. So it's kind of like running the business through a spreadsheet based on these kind of metrics of this current view of cash flow. The downside of that is what it does is, it makes the company essentially 100% not bulletproof. So you have a recession, you have something that impacts that cash flow, and then suddenly, the cash flow is here, the debt is like, 80% of cash flow dips to, 30%. And now the company is essentially, if it has something on its balance sheet, it will burn to that relatively quickly and then go bankrupt. So this is ultimately what led to the demise of Toys R Us. Circuit City, I believe, had a large private equity component. Here in the Southeast, Belk's got bought by a private equity firm before the pandemic, and I'm kind of interested to see if they make it through. Pretty much most of the large retailers, with the exception of Nordstrom, Walmart, Costco, the drugstores don't have private equity, but many of the mall-based retailers have, except Apple, have a big private equity component, and I think they're at risk. So I haven't seen a study, but I would say the correlation is very high just because of the nature of the beast. It's like saying how many slow gazelle get eaten by lions. Pretty much all of them. So I would say the correlation would be, almost 100% correlated. Jason.
Yeah. Yeah, I would agree with your hypothesis. I have not seen a study, and it is a smart, interesting question if there is a study, because the ones you disproportionately hear about are these leverage buyouts, and they, of course, have really challenging balance sheets and therefore are super vulnerable to COVID, right? And, Scott mentioned the Toys R Us and Circuit Cities of the world. Like Neiman is a poster child for that situation right now. The unit economics at Neiman Marcus are pretty favorable. It's a totally viable retailer with an unmanageable amount of debt. So, sorry to my friends at Neiman, COVID is probably putting you out of, into a reorganization at best. But I don't actually know statistically how much of the private equity debt in retail is leverage buyout. We hear about the over leveraged ones the most, and there's another kind of private equity debt which tends to also underinvest, like the super risky early private equity debt, which is the venture debt. Like those guys, tend to not be making huge infrastructure investments, and that's going to tighten up at the moment. But there are mezzanine level private equity firms that do invest in retailers that don't tend to leverage those transactions and as negatively impact the debt. So for sure, all the poster childs we hear about private equity investors are going to be the negative ones that are killing retail. And look at Scott with his advanced audio video right there. But I'll be honest, I do think there are some private equity firms that are much more beneficial to retailers that we just don't hear about as much. And what I don't have a good sense for is, as a total proportion of all retail, Like, are those good private equity firms a unicorn, or are they 50% and we just don't hear about them? Don't know.
Yeah, and I don't know, Kelly, if you can see the screen here, but I did find this article in Retail Wire. It's pretty current, so July of last year. So, obviously COVID's going to tick this up, but they found 10 out of 14 companies that filed bankruptcy had been acquired by PE companies. And then they actually peg it to 1.3 million workers lost their job. There's a classic movie called Wall Street, and it's pretty interesting to watch it because the whole premise of Wall Street is effectively a PE LBO, and this one guy has to decide the moral implication of, in the spreadsheet world, it looks great, and then he realizes, like, all these people, I think there's a familial relationship that his dad worked with, are going to lose their jobs. So it's oddly one of those weird things that has stood the test of time because it's been the strategy for 30 or 40 years. You get to see very young Michael Douglas as well. This report I have on the screen references what looks to be a more even kind of detailed report on this. So I would Google this kind of Jim Baker private equity stakeholder project, and you could probably, a lot of times you'll see this kind of puffy article about one of these things, then you go find the underlying paper, and there's a lot more really interesting data, and you can see some the actual data that feeds these studies.
Yeah.
All right. Next question is from, do we have I lost the ability to see the hand raised.
Yep.
Okay. All right.
Yep. So we have two more, and we are coming up on time, so we probably want to just go to speed round a little bit.
All right, lightning round. Karam, hopefully I said your name right there. Do you think the market for or demand for refurbished products or secondhand e-commerce go down due to the pandemic? I think it definitely will. Jason mentioned returns. I'm not going to really want used clothes and that kind of thing. I think there's, just like I said before, I think what you could do though is, if I was the seller, I would talk about how I have used, antimicrobials, disinfectants, sanitization. I'm becoming an expert on this, oddly enough. I'm a computer science guy, but I've had to have a crash course in this. So there is actually an EPA website that you can go to and see which chemicals are COVID effective and can bear that claim. So imagine you're a seller. What I would do is I would say, I have performed these actions on this product, and to the best of my knowledge, it has been sanitized and disinfected and very safe for reuse. So that's interesting. We did have the CEO of, I always get this wrong, the used person-to-person marketplace.
OfferUp.
OfferUp. I always want to. I use the apparel one. Yeah, and he said they've actually seen a huge spikes. So we've seen these macro trends of home gym, home office, and they saw in their kind of local platform a lot of activity going on there.
Yeah, I would say like most things, there's conflicting trends here, right? Like, people are more concerned because of the health ramifications. But people are like super economically conservative and value oriented. And so previously owned is likely to have a pretty nice spike. And if I were a guessing man, I would say it's net going to be favorable to refurbished and previously owned, because I actually, like, of all the health risks, the virus spreading through items that are several days old, frankly, like, it is probably an overestimated risk in most people's mind. There are ways to make those things safe. And even if the virus still exists on something that's a day old, it likely isn't very virulent, and it's less likely to infect you. So I have a feeling over time we're going to find out that you're probably not likely to catch it from a set of weights you bought from someone else that sat in your garage for 4 days before you used them. But I think those things are going to sell a lot more. So we'll have to follow that one. And then Daniel Goldman with what probably is going to shape up to be our last question. He referenced, so just for those that didn't know, Jason, intrigued by your comment in the last podcast that if someone offered you Amazon Web Services as a business, I wouldn't say no. But I kind of made the point that Amazon Marketplace is extremely profitable as well, but since it's not separately broken out on Amazon's earnings statements, people don't tend to realize how profitable it is. And so my point in last week's show was, everyone talks about Amazon Web Services being the profit driver of Amazon. I was saying the proportion of Amazon's retail business that's a marketplace is probably as good or better business than Amazon Web Services. So he's asking why I said that, and I may have just inadvertently explained it. To me, a market, like, it is hard to lose money on a marketplace. You lose money if you don't make the marketplace work. So if you can't get enough sellers or buyers, that's how you lose money on a two-sided marketplace, is you don't get enough of both sides of the marketplace. But if you have both sides to Amazon, there's no economic risk on the marketplace. There's no carrying cost of goods. There's no inventory. There's no cost of returns. There are none of those things. And you take a commission on the successful transaction. So it's 100% profit with extraordinarily low overhead and very little cash burden. And so, like, the unit economics of that are even better than AWS. AWS is highly profitable, but it's actually pretty capital intensive. And so in my mind, the marketplace just scales even more profitably than AWS. And I would argue the marketplace is bigger than AWS. So that was my why. And then the smartest part of his whole question he left for last. Who cares what Jason thinks? What would Scott think about that same question?
This will probably surprise you, because I was surprised Jason just chose marketplace. It's hard to answer a theoretical question because it's so theoretical. But in this scenario, I'm imagining I have the offer to either maybe buy or get AWS or the marketplace. And I would actually take AWS, because the marketplace and the retail business and Amazon are inextricably. What makes it work also is the fact you have the Amazon offer interlinked there, and then you can actually beat Amazon. And that's what makes part of what makes the magic of the hybrid marketplace at Amazon work really well. Amazon keeps the marketplace honest. The marketplace keeps Amazon honest. Now, there's a lot of noise, or there was a little bit of a scandal last week we talked about where there's, they always talked about this Chinese wall. There ain't no Chinese wall. They're actually using that data allegedly to figure out what's going on. Shocking. So it would actually, I'm kind of reminded of the eBay PayPal split, and that actually happened, and it wasn't too painful, but I always still pay with PayPal on eBay. So that was like, that was economically terrible, I think, for eBay to get rid of the whole payment system. And then now it's getting all this value from other places. So the short answer is AWS is much more extricable and could have Amazon as a customer without any impact, kind of like PayPal ended up being. The marketplace, because it lives and is integrated so deeply with the retail experience, is inextricable. And if you pulled it apart, I think the value would go down significantly.
There you go.
And then the first thing Amazon would do is buy a marketplace and compete with you. And I don't think you want to be in that.
And I would say, if you look at the history of Scott and I's investments, you should take Scott's investment advice.
Cool. One last thing we wanted to do is do a shout out to Jamie Dooley. He could not join us tonight because it's his birthday. Happy birthday, Jamie. Hope you're having some delicious cake or something. Probably not eating out, I would guess, but hopefully you're having a fun pandemic-themed birthday. Sorry you couldn't make it tonight.
Yeah, and happy May 4th day belated May 4th day to Jamie, who is another big Star Wars fan. Well, Scott, we've blown through our hour once again, hour and 9 minutes. So super grateful for all those listeners that stuck it out with us for the whole time. That was very kind of you. And these are super fun. And it's great to see everyone. Thanks very much for supporting the show. And please be safe out there. And until next time, excuse me, I want to get it right. Happy commercing.
You've been listening to The Jason and Scott Show. For all the latest news and trends on e-commerce and shopper marketing, subscribe to us on iTunes or visit www.jasonandscott.com.